Good afternoon, traders. My name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report. So, a webinar, a video where I will tell you what's going on the markets. It will last 30 minutes, and during that time, we'll try to look for the best trading setups in the whole market on currencies, commodities, and indexes as well. First, we will start with the macro calendar, so we'll talk about fundamentals. And from the fundamental point of view, we had overnight decision about interest rates in New Zealand. Interest rates remained unchanged, but New Zealand dollar went significantly lower. We also, apart from the decision, had a statement from Reserve Bank of New Zealand, and this statement was perceived dovish, especially comments from central bankers from New Zealand. But I will explain you that a bit later. What central bankers from New Zealand said. Apart from that, we are still under the influence of the tensions between North Korea and United States. So we do have a continuation of that risk-off mode on the market, which results in commodities like oil or gold heading higher, gold and silver. Indexes are heading lower, and safe haven currencies are doing much better, like for example Swiss franc or Japanese yen. So it didn't change overnight. We still do have a continuation of those movements. So about this conflict, what new happened overnight? Well, North Korea said that in the mid of August they will fire 4 ballistic missiles towards Guam Island. They will fly over Japan. They're just waiting for, I don't know what they are waiting for, to be honest with you. They said that they're waiting, obviously, for general approval for this strike. I don't know if I'm the only one in the room who thinks that nothing will happen, that they won't do anything. So I would be careful with this trend which we are seeing now. I would be really surprised that if North Korea would strike, would do anything, like totally anything to America or Japan or South Korea. I would be so surprised. I think they are just talking like that, and they have no intentions to attack anyone. So that is why I'm thinking that this trend which we're seeing right now, risk-off mode, can end soon. Once traders will see that nothing happened in August and nothing will happen in September, etc., that it can end soon. Also, the thing is that when the war actually starts, yes, we do have a risk-off mode. Gold is advancing higher, safe haven assets, other safe haven assets, etc. But from the history, what I analyzed through years of wars, after war starts, actually there's a risk-on mode, and traders are abandoning safe haven assets and they are shifting towards more riskier assets. That's usually what happens during conflicts and wars. It happened during a war in Korea, in Vietnam, when Iraq was attacked by United States. It happened on Ukraine. So that's what's happening with the price of the assets and various instruments when we actually do have a conflict. So that phase before the conflict, obviously risk off mode, but when the conflict starts, traders shift towards the risk on mode. Also, today we got a data from UK industrial production, manufacturing production came better than expected. Influenced pound a little bit. Pound was heading a little bit higher. Today, what we are still waiting for, PPIs, jobless claims, and that's basically it. Let me show you the calendar on top, and because we do have that important events from New Zealand, and New Zealand dollar mostly is heading lower because of the words from Reserve Bank of New Zealand Assistant Governor McDermott, who stated that New Zealand dollar needs to adjust lower. And they also, let me get that for you, needs to adjust lower. Okay, I will find that for you, just give me a second. Okay, about New Zealand dollar, that's actually it. So there was they left Wheeler, Reserve Bank of New Zealand governor, he said that he would like to see a lower exchange rate, and that intervention on the forex market is always open to us. And Assistant Governor McDermott also said that Reserve Bank of New Zealand changed New Zealand dollar language in a step towards intervention. So that was all perceived as a dovish tone. So that is why New Zealand dollar is heading lower. Fundamentally, we all live with North Korea and Donald Trump. So things from outside of the calendar have the biggest weight on the markets right now. Let me just show you what will happen tomorrow. We'll have a speech from Reserve Bank of Australia governor overnight. Also CPI from United States, very important data because inflation stopped a little bit recently, which was a surprise for many analysts, and we'll see what will be the final data here. And a speech from FOMC member Kashkari, which will be after the European markets will close. So that's it. That's the calendar. We can now go to the charts, and I can explain you what's happening here from the technical point of view. First, we can start with New Zealand dollar to American dollar, where actually that can be perceived as a false breakout here, and now we're paying fine for that. That was a false breakout, above 50% retracement of the main downtrend, and also, as you can see, that was a breakout from the flag formation. So far we are still above, but we broke this horizontal resistance here, so that's a reaction for the false breakout here. And once the price will come back below this area, look, it's important, it's a white area, but it's a long-term chart. It's a 30 pips white area, so well, not so big. When the price will come back below this level, that will trigger a sell signal here. Maybe let me adjust that. That's green area is the closest support right now. As long as we stay above this area, well, we are relatively safe. But I would be very careful with opening long positions because of this false breakout here. Looks dangerous, looks significant. Okay, so you can see this reaction after dovish Reserve Bank of New Zealand here. And now I will show you British pound, which defended this horizontal support with a small help from not so bad data here, as you can see. We are still in a tight range between local short-term resistance and the long-term support, well, mid-term support. It's 70 pips range, so for cable is very low. As long as we stay above the red line, the sentiment is still positive. As you can see, we're challenging first Fibonacci level of 23.6. As long as we stay above this trend line, and I would say above 38.2 Fibonacci as well, the sentiment is still positive. So even if we'll have a breakout of this line, I think here is also a nice support where the price can bounce even despite of the fact of the breakout of that uptrend line. American dollar to Canadian yen has slowed a little bit. We're having, well, gradually we're going higher slowly, but gradually price advancing higher. First resistance is ahead of us, 23.6. The next resistance is 38.2 Fibonacci level, and I think it will be significant if the price will get there. American dollar to Swiss franc. American dollar is gaining some strength after a sharp decline here. We are still under the influence of this bullish engulfing pattern on long-term supports. As long as we stay above those two supports, the sentiment is positive. At least that's what I'm seeing here. Australian dollar to American dollar, local support, like that is better. It can be perceived as a flag. So we are in a channel down formation here. We are below the horizontal resistance. Here is a strong resistance. The price may be heading lower. The first potential target for eventual downswing is here, so is 50 pips lower. From here, stop loss is somewhere here, 20. So quite alright risk to reward ratio. That's not the strongest signal in the world, but definitely it might be something interesting for the short-term traders. American dollar to Mexican peso is trying to break this trend line, but I don't see a commitment here at all. It could be done many times, 1, 2, 3, 4. It does not look like a strong breakout. It does not look like they have a willingness to break this level, so I would be extra careful with going long here. It may not happen. And now two very interesting instruments. Silver. Silver finally broke its nemesis. As you can see, nemesis is a goddess of revenge. That was the revenge, that was the nemesis for silver traders. As you can see, support, very important support, very important resistance, and finally got broken. that actually triggers a midterm buy signal, in my opinion. So we have high chances to get there to 17.10, right? 17.4, and that can be the closest. Well, can be. There are big chances that it will be the closest resistance. That's the long-term downtrend line. Breakout of this long-term downtrend line should trigger a buy signal for us. It all looks promising. It was done with this inverse head and shoulder formation. We remember this flash crash here. So if somebody entered here with a short position, and that was very bad. But also in the same time, look at it happens from time to time, and it's very interesting, and I'm very happy that I can show you that, because that's a very valuable trading lesson. That was an important long-term support, right? Many buyers had stop-loss orders below that level, and those stop-loss orders for the traders who had long positions here were all triggered, so they were taken off the market. Their long positions were closed, and after market is doing such a shake-up, they are getting rid of large portion of investors there with long position. The price advanced higher. That's very popular. I don't want to say it happens every week, but it happens. It happens, not maybe very often, but when something like that happens, so we have a deep penetration of stop-loss orders, and then price retrace. There is a really big chance that this movement will continue. Very often, stop-loss orders of many traders are taken off the market, and then the price goes the opposite way. You will see that many times. If you will start trading, if you will continue with your trading, you will see that definitely next time. Now the price is advancing higher. As I told you, the first potential target is here. Next one will be 18.6, slightly below 18.55, let's say. But before getting there, we need to challenge and break this downtrend line. But after breaking $16.8 per ounce, sentiment is definitely positive. Gold is also having a very good few sessions. We had an uptrend. We had a flag with blue lines here. In the same time, we broke the upper line of the flag, but also horizontal resistance here on $1,265 per ounce, which allowed us to make new highs in August. We actually beat also highs from the middle of June, and we are on the highest level since the 8th of June, with very big chances to aim for the June highs. And look at that on a daily chart. That is a very important resistance, because it's 1,000, slightly below 1,300. So it's a psychological barrier. It's $1,295 per ounce, which can be perceived here as an ultra strong resistance. About the trend line, we are on the downtrend line right now. With this bottom, we can see there. We can see here a symmetric triangle. If the tensions between US and Korea will continue, the price will be heading higher. If, for example, Kim Jong-un will say, "Okay, guys, I was joking. I'm not gonna attack you," definitely the price of the gold will go higher. It will go lower. But as for now, we still do have those tensions. Kim Jong-un said that they will bomb Guam in the middle of August. So at least we still have next 7 days, 8 days, because it still will be the mid of August. We should keep that risk off mode on the market, which should benefit gold definitely. Euro dollar yesterday, look, they created a very strong pattern, which was a hammer on a trend line, right? Hammer on a trend line on the daily chart is usually a strong buy signal. But from the very beginning, drop from non-farm payrolls, wedge, drop from Fire and Fury, from Donald Trump, pennant. We got the breakout of the lower line of the pennant, which was highly expected because pennant is a trend continuation pattern, and it happened after a drop. But well, the drop happened, right? No doubts about that. But it stopped on a very important support, and we are telling you that the chances that we'll touch this trend line are very high, and we did, and we bounced from it, and that was this hammer. But it didn't cause the price to go significantly higher here, but we have another test of this downtrend line again. So as you can see, and test was positive again for buyers as for now, but it just only proves that this is a very strong significant support, right? So it also means that in case of a breakout we should get a strong movement, because many traders now see this as a support and they have stop loss orders of their long positions, probably here, 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 and the stop loss for a long position is a short position. So that is the reason why when the price breaks supports or resistances, sometimes the price accelerates. Because this movement is additionally driven by stop loss orders which are below or above those levels, depending if there are resistances or supports. Actually, now we can remove those pennants and that wedge, because we can create another pattern, which is here, which is here, and this is a wedge. Not to confuse the colors, let me make a trend line, for example, green, and the wedge black. So far it's still bullish. Trend line was defended and we are in a trend continuation pattern, but there is no buy signal yet. The buy signal will be created once the price will break the upper line of the wedge, and at the same time the sell signal will be created once we will break those lows, which corresponds somewhere here. So we wait. We are in a tight range of 70 pips, as in cable, for example, 70 pips as well, and we're waiting for a breakout. Dollar index happened exactly what was expected yesterday, right? Upswing, wedge, upswing, wedge, upswing, fast comeback, okay, but still lower line was defended, and upswing. And on our daily analytical report, we were somewhere here yesterday before the breakout. The breakout actually happened. So another good one for Alpari team. There is a support here, horizontal one. I would say that as long as we stay above this horizontal support, the sentiment is still positive. So dollar should be heading higher. That's the closest resistance. Also a tight range. It's no longer a wedge, it's a rectangle. British pound to Japanese yen, as you can see, we're trying to benefit from the data, and also that's not a coincidence, as here long-term uptrend line, here long-term uptrend line, and the price bounced on a daily chart, also a hammer, and that's a long-term buy signal, right? That's a long-term buy signal, hammer on an uptrend line, but the traders are not following that today. So that's a good one for patient traders, that they didn't go for the signal straight away, but they waited for the confirmation, because there is no confirmation right now. The price does not want to confirm the positive sentiment here. Euro to Japanese yen, defending the horizontal support, but high chances for breakout. The next one is here. New Zealand dollar, Japanese yen heading lower. You remember I had a long position here, but I closed that here. If I didn't, wow, that would be a nasty trade. That would hurt. American dollar to Japanese yen, that's very technical. This lower line of the symmetric triangle formation apparently is more relevant than this horizontal support, because the price broke it, tested that as a resistance, and is heading lower. That's a confirmation of this breakout, and the chances for downswing are much higher, are much bigger right now. Now let me switch to oil and two indexes. Oil broke the upper line of the pennant and is heading higher. Look at that. After the breakout, they tested that as a closest support. That's a positive sign, but I would be careful with going long here as long as we stay below 61.8 Fibonacci, which you can see here. As long as we stay below, there is no clear buy signal yet, but the breakout here should trigger a buy signal. At the same time, if the price will bounce from this level, the breakout of that support, 50% Fibonacci level, should trigger a sell signal. So oil, again, another instrument which is closed in a tight range, but possibly a good trading signal can emerge here soon. DAX, that was beautiful. So we had this horizontal support which they tested once, twice, 3, 4, and after a fifth attempt it finally got broken. Broken supports becomes resistances. As you can see, we had this test here. I'm not using lower time frames for trading, but I will show you just for the price movement. So that horizontal support, actually we can adjust it here. Yes. It got tested, breakout, tested as a resistance, downswing. That's a very beautiful price action, showing us that the sentiment is very negative here on DAX and the price should decline lower. Last but not least, S&P 500, which despite those tensions and higher volatility, at least for some time, is still locked in a range between resistance on 2,485 points and support on 2,465 points. We went above, but that was a false breakout. That was a false breakout above the horizontal resistance. Right, the price went significantly lower, but is still defending here. I would say that even if they will break the support, nothing will happen, because for buyers, for the healthy uptrend, they need to just hold above this lower pink line or purple, lower purple line, which is uptrend line here, and lower line of the channel up formation. And as long as we stay above that line, the sentiment is definitely positive. Even if they will break it, they still have this support. We have so many supports underneath that it's really hard to estimate where the downtrend will start. Well, short-term downtrend, short-term negative sentiment will start once this lower line of the channel up formation will be broken. So far so good. So far we keep above. As long as we stay above, the sentiment is positive. but in the same time we have those tensions. But you all know for the last few years that traders in US are crazy. They are just crazy. They just made new highs. They actually don't care about anything, and for them every situation is just an occasion to buy. War with Korea, why not buy more? That's their attitude. You can see that, for example, now when they are building a hammer candlestick on H4 chart on the local support. Thanks guys very much for watching trading, for watching daily analytical report. I hope you like that. And now very short break, but after that a very important webinar about traders psychology, about traders mind. I hope you will all attend this webinar because it's super important, and I would love to see you all there. For more trading setups, visit our Twitter account and our website.